At first, the market had a chance to go higher, but Jerome Powell stepped in, and now we're going to get that stock market crash. The main thing I want you to notice from Fed Jerome Powell speaking today was how he uses his language. When you are expecting an answer that could be good, and all they have to do is say yes, and they refuse to say yes, they say it could be. That is a very political way of saying we can't say yes because we kind of know it's no. Obviously, a lot of the questions were about these rates, and we just said that when these rates start to go up in this unknown area, we should start to be very fearful. And the longer that we sit up in this area, the more the market is going to continue to tear down. I'm sick and tired of talking about yields. They're in the unknown, so we should be very fearful at this moment, and we can see that fear showing itself in the market right now. Look at Apple as we just tore down. We looked like we were going to cross on the daily, but what happened here? We got that nice rejection, which means that we need to be bearish over the next week or two. And to just zoom in, what I'm looking at is I thought that if we did pile up in here, it looked like Apple really did want to break higher, but Fed Jerome Powell had to go and ruin that. We got our dip into the top. We tried to hold, and now we're breaking below into lower levels into our support zone here. What's going to end up happening now is this 2 hour is going to curl over the next couple days, and then we're going to see some downturn over the next week or two. Most likely we are heading to that 165.79-ish area, and that's just where we might get a bounce off of our 200-day moving average. Now, if you were subscribed, we've been telling you to pay attention to Tesla and pay attention to this channel. And when we do get a daily close below this channel, it is going to start to open up the floodgates. So that channel is broken. Hopefully you were subscribed and you were paying attention for when that channel has fully broken. You got the close right now, so now you know what to do. This thing is going to quickly head to lower levels, and then we will see some kind of dead cat bounce that will then project us all the way down to, let's just take this measured move and see if this one could play out. Looks like it took some time to play out, but we can see we are heading possibly all the way down to 192. I have a marker here around 207.42. I believe that we are heading towards that 200-day moving average in the near future. It could happen over the next month. Yesterday, we were talking about the SPY, and we said that this wick coming out, I wasn't surprised for it to get bought right back up because we do have that big news event today, which yesterday was tomorrow, but we did get that event. We tried to move higher, looking like we were like, please, Jerome, give us a cookie. That didn't happen. So now we see a clean, very clean break of this, and we can almost expect some kind of possible gap below this level, because if we do see this as support, a lot of market makers will now want to gap below that and come into our trend line. We'll have to mark out where we're going to see that going in the next day or two. So subscribe if you want to stay in tune where I think we could see a possible bounce in the near future. I was paying attention to the Qs today, and what I noticed was right when we got near where we would be considering this a retest, this is a pretty good retest, and then we saw rejection and we cut this low. This bar right here is confirming that we have switched to the downside, and if we just switch over to a daily, we can now see that I am getting a solid sell signal. We saw that crash a couple days ago. If that was your indication that we wanted to go lower, we saw that red bar on the histogram. Maybe that was your hint, and maybe that's your trading style. But overall, we now know the overall direction of the market over the next, I don't know how long, but I'd at least say the next couple of weeks is to the downside. Just to tell you how low we could go in the Qs, we could go all the way down to this 340. Okay, this is what is priced. This is what the options traders have priced in for the market for this whole month. So Qs actually could get all the way down to about 340 by the end of the month. All right, guys, we're going to save the best for last for you guys, and that's the VIX. What did we get on the VIX? We got a close above the 50. That means volatility is about to skyrocket back into this market. And also at the same day, we get that cross on the MACD, given that green impression. So volatility is back. It is here to stay. And I highly encourage you to pay attention to your positions as we move forward, because the overall look is to the downside. The main takeaway from this video is we didn't necessarily get the bounce to fill that gap. That must be one of those 20% times it doesn't fill the gap in the next 5 trading sessions, but we did have a gap below an Apple that we're looking like we're going to fill tomorrow. So we should expect more selling because all of these moving averages have turned. All the algorithms are starting to get to work, and we most likely will start to see some dramatic downside over the next 2 weeks. That's all I got for you guys today, and it's looking pretty bearish, but I hope you guys still had a great day today trading, and I hope you guys have an even better day tomorrow, all right? Peace.